Good morning all, and thank you for joining us this morning for this Gallagher webinar. I want to thank Suzanne for the introduction and all at LUPC and SUPC for the opportunity to speak to you this morning. Obviously, we would have preferred this to have been face-to-face at the lovely County Hall venue, and I'm sure the lunch there would have been much better than what awaits me in my fridge after this session. My name is Phil Webster, and I form part of the team from Gallagher that supports the current members of the insurance group, and I'm responsible for engagement with members who are interested in joining and outlining what support and advice we can give them. I'm joined by my colleague Archie Ghinn from Gallagher's cyber and technology team. Gallagher is the appointed insurance broker, as Suzanne said, and risk advisor to the LUPC insurance group, and the group represents opportunities for members of LUPC and SUPC to access a compliant and competitively rated insurance program. More broadly, members can also access independent advice on how insurance can support their management of emerging risks. And if the last few months have taught us anything, it has underlined the fact that we live, work and engage with the world increasingly digitally and online. And many have commented that COVID-19 has changed the landscape of remote working irrevocably. Companies will need to constantly be abreast of new vulnerabilities in their networks to keep one step ahead of what we call threat actors, who no doubt will seek to exploit the pandemic to defraud individuals and companies alike. During these turbulent times when most of us are pulling together to support each other, unfortunately cyber criminals are trying to take advantage of some of the new work from home protocols, and there has been clear evidence that hackers are targeting the remote workforce with sophisticated COVID-19 themed social engineering campaigns, and we do expect this to continue. The main complication with the additional volumes of people working from home is potential poor cyber hygiene from employees, i.e. using personal email accounts, printing confidential documents at home, etc. And employees will also be now connected to home networks and most likely use a range of video calling apps, including Zoom, that can lack a sophisticated protection. If a hacker gains access to a company's network via an app that is unrelated to a company's IT system, for example, by hijacking a video telephone conferencing call, it may be difficult to trace the vulnerability and avoid future breaches. And in our experience, hackers seek to exploit the fact that individuals are now susceptible to scams during the times of crisis. Phishing emails and texts to the general public related to COVID-19, such as bad actors posing as government officials and medical suppliers, have been widely reported in the press. And as the pandemic evolves, again, threat actors have been utilising more targeted strategies to defraud companies. These include emails purporting to be from senior executives, for example, feigning IT issues and resorting to use alternative email addresses, and suppliers requesting a change in bank details. Even before COVID-19, data protection legislation had been ramped up. And in a world where data is presented as the oil of the 21st century, although I'm not sure that means that actually it's going to be worthless in a few years' time. However, organisations do need to prioritise their information security systems and the risk management that support these. So if we could go on to the next slide, we'll look at the agenda for today. We're going to look at some of the current major factors and trends, including some of the issues arising from COVID-19. And then we're going to be looking at what we call the risk analytics in terms of how we measure your exposure as an organisation. And then we're going to move on to examine what the insurance solutions look like and how they are structured. I mean, on that point, the insurance solution is actually quite exciting, I think. It's not often you'll hear someone say that, but for me, it does represent an evolution of insurance cover. It provides both first-party response cover, akin to when a property insurance cover in the days of old, if your building caught fire, the insurance company owned and provided the fire brigade, and they would come and they would put the fire out. Under this cover, it provides legal, IT, PR and media support that would be required in a data breach scenario. And then it also provides the third-party cover for any legal actions brought against you, akin to more conventional liability insurance policies. Finally, what we're going to do is look at some case studies within organisations of a similar profile to LUPC members and better understand how the exposures have arisen and how the insurance cover responds. I understand there is a mechanism for asking questions, as Suzanne said at the start, and we'll set aside some time towards the end to try and answer these. The purpose of the webinar is covering cyber and data protection risks and insurance. And whilst we'll be covering some of the impact of COVID-19, we obviously can't give any specific advice or make comment on broader insurance cover in relation to the pandemic. So what I'll do now is I'll hand over to my colleague Archie, as said, from the Gallagher Cyber and Tech team, and I'll allow him to go through some of the factors that are driving the need for the insurance cover. So over to you, Archie.
Perfect, thanks, Phil. If we can move on to the next slide. Thank you. So I'm sure you're already well aware and well educated in GDPR, but here I'm going to briefly summarise what has changed since the Data Protection Act, which was the most recent piece of UK data regulation before GDPR, and that was implemented back in 1998. So the scary statistics are the ICO fines, so whichever is greater are 4% of global turnover or 20 million euros. So we actually only have 3 to note so far in the UK. We have the Marriott and the British Airways fines. So both of these are still in their early stage. Only intents to fine have been issued. Both companies have appealed, and the actual issuance of the fine has been further delayed by COVID-19. The third fine was actually just a small pharmacy who left 500,000 paper records in unsealed containers in their building, which ended up being water damaged. So the fine for this was £275,000 for the careless storage of this sensitive information. The next change is the idea of considering data protection right from the beginning when you're designing IT systems, or privacy by design. Thirdly, before people's data is stored, they need to give consent. So this is the concept of opt-in. And another is breach notification. So if you lose someone's data, you have 72 hours to notify that individual as well as the ICO. So this notification period is very important if you want to avoid the ICO fines. And I'll talk later about how an insurance policy can aid in this notification process. Finally, now there is the right to be forgotten. So anyone can request you delete all record of them from your systems for which you have a month to respond. So I think it's important to refresh ourselves with this as it shows how we need to understand our responsibilities in today's digital world. So if we move on to the next slide. So how can insurance help? So firstly, insurers are affirmatively referencing GDPR in their policies. So the insurer's intention is to give cover for these fines where possible by law. So where the grey area currently is whether these fines actually are insurable by law. There's currently a debate going on over whether a fine like this should be able to be covered by insurance, or whether it should be deemed punitive and therefore paid by the guilty party. Because the regulations are so new, we haven't actually seen anyone attempting to pay a fine through insurance, so there's no defined case law. The Marriott and the British Airways fines will be useful, though, in setting the precedent for this when they're eventually processed. The pharmacy I mentioned before didn't actually buy insurance, so that was no help. Where our policies definitely will respond, however, is with any legal costs or investigative costs undertaken by the clients in defending themselves against these fines. So these kind of costs can rack up quickly. I think, Phil, if you're going to take through the next slide.
Again, just trying to emphasise the importance for universities and other public-facing bodies. We know that both of those universities and publicly funded organisations have been heavily targeted, whether that be for research information or information on alumni or members of the public. We know that those are heavily targeted organisations. I just want to pull out 2 figures here from this list, because I think that the purpose of this slide is trying to emphasise the importance and the threat. But 2 that sort of stand out for me. Firstly, 43% state that student data has been targeted. And I'd actually be surprised if that isn't higher now. I think this has implications because, as we know, the millennial generation are a lot more guarded around their privacy, and I think they're probably a lot more likely to take legal action about guarding that privacy. I think it also highlights issues pertaining to the Office for Students, the new HEI regulator, because I think they're probably going to be a little bit more interested in, again, threats to privacy and ensuring that the student as a consumer is protected. I think the second one is around the intellectual property theft. 25% have had intellectual property data stolen. Again, in times when research is critical, and we can see this, many of you would have seen the news, universities at the front line in terms of research into vaccines for COVID-19, Southampton, Oxford and Imperial, all listed as organisations leading on the research. I think that's a vital statistic and shows that if we value our physical assets and put into place mechanisms for those, we should do the same with our data. And I bet most institutions represented this morning buy theft insurance for all of their valuable items. How valuable is data in the overall scheme of things? So we'll just move on to the next slide. Again, what we're just trying to do is underlining our earlier message that COVID-19 has changed much in our everyday lives, and this requires probably a reappraisal of the risk landscape within your institutions and what you prioritise by way of risk and subsequently insurance purchase. Mike Kilner of LUPC told me earlier this week that in the biannual AIRMIC, which is the Association of Insurance and Risk Managers in Industry and Commerce, they conduct a survey every 2 years, and the survey conducted in 2019, the risk of a pandemic was listed as number 60 in their priorities. And I'm sure it'll move up the rankings when the survey is conducted again in 2021. But it shows that the risk landscape, I think, has changed. And I'm probably I want to use this opportunity to put a bit of a challenge out to institutions and delegates on the call this morning and procurement teams, because we often see cyber and data liability insurance cover, I think probably we deem it as a luxury purchase, i.e. if I have enough budget for it, I will consider it. And I think we need to reappraise that approach, because I think our recommendation is that you start by assessing the risks in your organisation, and then you build your insurance program and your purchase specification from there. As mentioned above, I'm sure we probably all insure for theft of contents, but what is the likelihood of someone rocking up to your buildings and stealing all your desks and chairs compared to the threat of your data? So I think we just want to try and position, but part of this is just trying to sort of challenge some thinking around what are your priorities when you're purchasing your insurance program. So I think what we're going to do now is move on to how some of the insurance cover is structured. So I'll pass back over to Archie.
So yes, I think I'll start just by running through some high-profile claims that we're seeing over the last 12 months. So Capital One up there suffered a huge data breach. Over 100 million of their clients' data was stolen. Fortunately, the majority wasn't actually sensitive information, but in terms of serious information that was stolen, I think there were about 150,000 social security numbers taken. Now, for this event, there was about $100 million worth of costs, and this was purely down to customer notification, credit monitoring, breach counsel, and litigation defense, purely because of the amount of records that had been taken. I've already mentioned the two big ICO fines. We have British Airways there at £183 million and Marriott at $123 million. Virgin Media was another one. That was last month. About 900,000 of their customer records were left unsecure and available online for around 10 months. So although no financial information was available, I expect we'll be seeing ICO action and some class actions off the back of this. So this one wasn't even a hack, but simply human error making the information available online. At the bottom there, we've just got some ransomware statistics. So there are various different strains of ransomware. Some are more targeted at larger firms and demand higher ransoms, such as Ryuk and BitPaymer. And then some, like Sodinokibi, are used for mass attacks, where many companies can be targeted in single attacks. So a client of ours recently suffered a Sodinokibi ransomware attack. The ransom was over 2 million, which was paid, but the forensics, legal costs, and business interruption will be in the millions on top of that. So the next slide's got been taken from AIG's annual cyber report. If we could move on to the next one, please. So this is just demonstrating, what's causing the claims at the moment. So the biggest cause of claims is actually your work email compromise. So this is usually done by individuals clicking links in phishing emails and entering their login on a fake login page, which then shares the information with the hackers. So this can vary in severity. It obviously depends on what information the person has on their email account, or indeed what that person's role is within the company. The second largest one there is ransomware. So this is becoming increasingly targeted and disruptive. It's resulting in huge losses in business interruption and often ransom payments. So the next slide will go into a bit more detail on ransomware, but I will quickly look at the last couple there. So in third, we've got data breach by hackers. It's actually on par with simple employee negligence. So we see plenty of claims arising simply from employees sending important data to the wrong email address, or CCing instead of BCCing. I'm sure we're all guilty of that. So this is a big cause of claims, which can be reduced with simple training and diligence. I think if we move on to the next slide. So, as I said, I thought we'd go into a bit more detail on malware and ransomware, simply because of the amount of trouble it's causing in the public sector space. So malware is simply malicious software. Examples are spyware, bots, worms, viruses, and indeed ransomware. So ransomware is a type of malware which will lock down an entire system by encrypting all the files on the network. The attackers will then demand a ransom, usually in the form of a cryptocurrency. It's usually Bitcoin, so that the payment's untraceable. They then send over a decryption key when the payment's been made, so that files can be restored and business continued as usual. So this does actually happen the majority of the time. They can get their files back. The next slide has just quickly got a bit of an image. So this is a kind of message that will appear on your network if it's been infected with a ransomware. So it's a scary message to greet you first thing in the morning. I'm sure you'll agree. So it's effectively a threatening ransom note instructing that the files have been locked down and how to get into contact with the hackers. So this example here is Ryuk ransomware. I mentioned before, this is a particularly targeted strain which often demands large ransom payments. As it says there, they unlock a couple of files for free to demonstrate it's possible, and then they will do the rest once the ransom has been paid. Sorry. Finally, on ransomware, the next slide's got a graph for you. So this graph shows how the ransom demands have changed over the last couple of years. So you'll see along the bottom, that orange line is just all general ransomware, which until the end of last year has been relatively flat, sitting in the sort of hundreds and thousands. So the red line is Ryuk ransomware, which has fluctuated slightly over the last couple of years, starting at around $125,000 a couple of years ago. But if you'll see at the end of last year, both of these have seen a huge increase. So Ryuk's increased to around 1.4 million, and the average demand in general ransomware is increased to about 200, and these are both still on the rise. So we are seeing huge ransom demands, and often these are being paid in the last couple of years. So I think the next slide is on risk analytics. So Phil, I think if you can run through this.
Absolutely, yeah. Thank you, Archie. I think what we're trying to do here is just give you an idea of how an insurer will underwrite and rate a cyber and data liability risk. It's also to underline that this insurance cover has the same process as any other insurance purchase. Underwriters will want to see information on how you manage the risk. Akin to my theft analogy from earlier, they will ask you what alarms and what security systems you have in place. So when you purchase property insurance, they'll ask you those types of questions. So similarly, a cyber data underwriter is going to want to know some questions around how you store your data, how you look after it, and how you would respond to an incident. In a procurement exercise, we do know that the more information that can be presented, the better the outcome will be. Underwriters are cautious individuals, and in the absence of data, they will presume the worst, which will then impact on premium. So our job here is the same as any insurance purchase. As I said, a good procurement exercise will have this type of information contained within it to be able to get the best result for you.
So just going into a bit more detail. So on what is cyber insurance, or what are you getting when you're purchasing a cyber insurance policy? So in short, cyber insurance covers the losses and the liabilities associated with the loss, theft, or compromise of data, or the costs associated with damage to network or databases. So when we're talking about data, we're not only talking about digital data, so it can be paper records as well, as we've seen with those previous, that pharmacy and the GDPR claim. So a cyber policy, as Phil briefly touched on earlier, will also include what we call a breach response service. So this is provided by a team of specialists who work with you in the event of a breach to ensure the matter is dealt with as quickly and effectively as possible, to minimize any damage to you and to your business and reputation. So the next slide breaks down, the easiest way to break down a cyber policy is into first-party costs and third-party costs. So these are all listed here, and the next slide will break into each one in a bit more detail. But in short, typical first-party cost in a cyber loss would be direct business interruption while the networks are down, any direct ransoms that are paid in an extortion scenario, and those breach response costs listed there. And then, of course, you've got your typical third-party litigation, such from third parties such as students, staff, parents, or customers. And then we've got regulatory costs and media liability in there as well. So the next slide is summarizing breach response. So the breach response is actually the basis of what this policy is built around. And it's what makes cyber insurance different from almost every other type of insurance policy. So in the event you suffer an incident, there's a 24-hour hotline, which is available 7 days a week that you can call. So this gives you access to all the necessary parties to minimize the impact of the incident. So it's this service which makes cyber unique. So the call takes you through to a breach response counsel who will guide you through what is needed on your end, as well as employing IT forensics to firstly establish how the breach occurred, what data has been affected, but most importantly, getting any intruders out of the system. The breach response counsel will also take care of notifying any individuals that have been affected by the breach. So depending on how many records are on file, this could be a very time-consuming process. They'll also notify the ICO within that 72-hour window. They'll engage call centers if necessary to deal with any incoming queries following the notification. So usually people have plenty of questions when they know their data's been stolen. If payment card information was taken, we can offer credit monitoring services for up to 24 months. And finally, PR companies can also be engaged to manage how the whole incident is viewed in the public eye. So this can be very important when you're considering your reputation. So one of the benefits of these policies is that insurers can be really flexible here. So if you do have relationships with legal teams or any other vendors, we can endorse these onto the policy so that you can use them in the event of a claim. Now, each of these slides does have a real world event if you're interested to look through in your own time, but we've also got case studies at the end. So I think we'll focus on those instead. So if we go on to the next slide, and regulatory defense costs. So this is very much what it says on the tin. It's your legal costs incurred to comply with any regulatory action taken against you resulting from a breach. As I said before, it's currently a grey area as to whether these GDPR fines will be insurable by law, but as I said, they'll certainly be covering the investigative costs and the defence costs. So a relatively simple one, regulatory defence. The next slide is security and privacy liability. So this is actually where cyber insurance first started in the States. So as a university or a government body, if you're holding student data or employee data, for example, you have a responsibility under GDPR to protect it. So in the event that it's stolen by a hacker, or if it's shared with a wrong group through a misdirected email, they have the right to come and claim compensation from you. So this module provides the cover for the defense costs and any resulting damages against you from these lawsuits. So as Phil said earlier, since GDPR, people are a lot more aware of what their data is worth. So we have seen a lot more of these claims in the last couple of years. There are a lot of ambulance chaser type law firms who specialize in getting people compensation for mishandled personal information. So if you Google that Virgin Media breach that I mentioned earlier, the first few links on Google are all pages to UK law firms claiming to get compensation if you're involved. So it's a key coverage under the module, that one, under the policy, that one. The next slide, we've got this is cyber extortion. So this is the ransomware we've discussed before. So in the event your systems are locked down by ransomware, firstly, the IT forensics can establish whether the hackers have what they say they do. If you have sufficient backups, we can help you restore the systems from these quickly to avoid too much disruption. If not, the legal teams can get involved and help negotiate these ransoms down. So if it's determined that the ransom will need to be paid, it's usually the last resort, but you do have access to a Bitcoin purse under the policy to ensure the ransom's paid quickly to get your systems up and running before too much business is lost. The next coverage module on the next slide is multimedia. So it's not actually one where we see a huge amount of claims currently, but it effectively provides cover where lawsuits are brought against you for any information published through your media channels. So this would be websites or social media pages, for example. So these lawsuits typically include libel and slander cases, or perhaps copyright infringement. So again, it's any defense cost as well as any resulting damages. So the final module on the next slide is business interruption. So this is the loss of revenue specifically attributed to a cyber event. It differs from the physical damage business interruption, which I'm sure a lot of you are aware of, in that obviously it's purely from a network event. So there's also cover under this module for the costs to restore affected data. So this is digital asset restoration. So again, that can be a key coverage module, is that digital asset restoration to replace any lost data. On to the next slide. So that was it for the key coverage modules. I think, Phil, you were going to talk briefly on the overview of underwriting rationale.
Yeah, absolutely. So I think this is just trying to bring everything together, really. And what we've tried to do here is distill our whole approach into a graphic that outlines the process from information gathering in the top left. So gathering the threat and risk information, determining what a maximum loss will be, and part of that job is obviously determining the limit of indemnity, because under these insurance policies you buy a limit of indemnity as you would do under any liability policy, starting at probably £500,000 or £1 million, and that can go up to any limit you determine is appropriate for you. But so that's the starting process. Exposure modelling, and that's part of the process, is trying to understand that. And often when we do these exercises, what we do is we sit down with an institution and we'll discuss that with the DPO, with their IT teams, legal, and we find that that's the best approach to get everybody around the table and discuss what their approach to more broader information security management is and get an understanding of that. And then we go on to the broken phase, top right, which is where the likes of Archie and his team would then approach the insurance companies involved, get the terms, and then the bottom two elements are in terms of breach response, how the insurance policy actually works, working in action. And as Archie has outlined, the breach response and then the claims handling aspect of that. So that really sort of distills the whole approach in one simple graphic. I think what we're going to do now is just try and look at some case studies, because I think that's the best way of evidencing and demonstrating how this insurance cover works within the context of an actual loss. So Archie, I think you can take the first two of these.
Yeah, happy to take the first two. So this first one is yet another ransomware attack. So this is actually, and it happened at the end of last year. So effectively all their systems were locked down with rogue ransomware, and the hackers were demanding a $4 million ransom. So in this case, the client quickly engaged with IT forensics firm Crypsys. Fortunately, in this case, they had adequate backups, and they could then work with Crypsys to restore the backups, and they didn't end up paying the ransom. So it was fortunate in this case that the backups weren't affected by the ransomware. So it certainly wasn't as bad as it could have been. But even though there's no ransom paid and no data actually physically stolen, they had quickly incurred over $800,000 worth of fees in legal advice and IT forensics, which were all picked up under the insurance. So the next slide is another higher education example. This time it's in the UK. So client found suspicious file on the web server. They then employed IT forensics to establish that the server had been affected with a number of web shells. So these are effectively bits of code which allow for remote control of the network. So they also found that there'd been unauthorized access from a number of other IP addresses. The client sought legal advice off the back of these forensic findings. So the web server in question was actually a booking database, and it was used for all sorts from concerts to sports pitches. So there was actually plenty of data available. Fortunately, after more analysis by the forensics, in this instance, they found that no data had actually been exfiltrated from the server. So the legal advice was that there was no breach or no legal liability. So the next slide quickly summarizes the costs. So despite not actually being a breach, you can quickly see here how the costs accumulate. So IT forensics for a week cost £30,000, and legal experts for over 2 weeks cost £20,000. So first party costs here totaled £50,000, and there wasn't actually even a breach. So the next case on the next slide's a similar scenario, which actually turned out to be a bit worse. I think, Phil, if you're happy to run through third example.
Yeah, and I think it's an interesting comparison, because I think in this one it was a similar scenario in terms of the university's events booking system and details of their union membership groups have been targeted. But unfortunately, in this case, there was clear evidence that the data had been accessed, or what we call exfiltrated. Data exfiltration is the unauthorized copying, transfer or retrieval of data from a computer or server, and that's a sort of a malicious activity performed through various different techniques, typically by cyber criminals over the internet or other network. The analysis in this scenario determined that there was potentially 150,000 past and present students, which you can appreciate. Most universities may well have that, with the sort of the alumni numbers potentially going back over a number of years. That would quite easily be achieved. Equally, there may be LUPC members in public-facing organisations that could have membership or customer information of similar sort of numbers. So I don't think those sort of numbers are unrealistic in terms of data, what we call subject sets. So the potential numbers of subject sets. So that's 150,000 potentially impacted by the data breach, and the GDPR legislation that we've alluded to at the start is really clear that each of those needs to be contacted. So you're then beginning to talk about a fairly significant logistical exercise. If we could move on to the next slide, we'll just expand upon this a little bit more. So the appointed legal representatives assist the insured, and what they do is they produce an FAQ sheet, including an answer as to what, if any, compensation, ID theft protection will be offered. And at this stage, the university has to grapple with the questions over why they had the old data, because they also need to give that justification to third parties and to the ICO, who at this point obviously are interested as well. Because as part of this, because there has been a data breach, as we said earlier, GDPR legislation is very clear. ICO needs to be notified within 72 hours. So the university then engaged with the legal representatives to make that notification. How are you going to inform the data subjects? Again, a little bit of a logistical exercise, because email can end up in junk email folders, or worse, it could be spoofed. So I think the general guidance from the ICO is that traditional mail needs to be used, snail mail, and again, the legal representatives assist the insured to draft the letters. And in fact, I think what they did in this instance was a PR firm was appointed to coordinate the campaign. So immediately you've got first class post 80p a letter. So that's £120,000 straight off in terms of just notifying the data subjects in the first instance. If we move on to the next slide, we then expand upon it in terms of how people are going to get more information. I think as a result of the letter correspondence, there's then a frequent or significant outlay of staff to accommodate that, in terms of the increased number of queries coming into the university. I think there have been scenarios on major data breaches where a call centre has been put into place. That the university in this case didn't do that, but they did have to set up specific routing calls via a specific reception and an admin team. So we then begin to move into the question of what you're liable for. So the loss of information in some cases can be deemed to be emotionally distressing, and the university was sued by individuals for the harm caused. The scenario is derived from the information lost that links to, students to specific unions or membership of certain groups. For example, a student may not wish to have the details of their membership to the LGBTQ group breached, and there could be scenarios arising in terms of the emotional distress of that. That's quite a plausible scenario. So you're beginning to sort of see how the third-party liability aspect of this comes into play. You're then also talking about the regulatory fines. So the ICO, this is a scenario where the ICO actually viewed the university as having handled the claim in an effective manner, but is nonetheless still guilty of negligence in the first instance. So the fine administered there of £90,000. So the breakdown of costs, if we look over the page onto the next slide, we can see how quickly that can accumulate. So just on the first party element, you're talking sort of legal cost of £40,000, forensic team that are retained, cost of £50,000, £120,000 in terms of notification costs, the fine of £90,000, so first party costs straight off of £300,000. And that's before we move on to the third party costs, which is, as I said, the liability associated with the distress of that data breach, which a third party is very entitled to bring. So you're looking at both the defence costs, which is the law firm engaged to defend your position and come to a negotiated settlement with those plaintiffs. 1,000 plaintiffs in the group litigation order, each for £2,000. So you're looking at a loss there of £2 million, which in the scheme of things, in terms of liability losses, you know, we do see on traditional employers and public liability policies, those types of losses from time to time. So that is not unusual. or far-fetched in terms of a potential scenario. So I think that gives you an idea of the sort of financial exposures that can be presented, and then also hopefully how an insurance policy will respond. We're coming towards the end of the time, I think. So hopefully that has been, it's a little bit of a whistle-top tour, I do appreciate, but hopefully it just brings to bear how the insurance cover has evolved in the last few years. Often when we have conversations with organisations, I think the cover has changed a lot in the last 5 years. 5 years ago, there was a limited number of insurers providing this. It was fairly inaccessible, and the premiums, truth be told, were quite expensive. We have seen a big change in the last 5 years with more insurers, more accessibility of terms, and more competitive rates now available. So I think it should form part of any prudent organisation's insurance programme considerations. And just going back to my earlier point, I think the pandemic this year, I think, does give us pause and consideration around actually what risks are facing our organisations. And I think it's interesting, numbers of organisations I've spoken to recently who have said the remote working has underlined that actually, the buildings that we operate in, 50 years ago, the buildings were our prize assets. Now, I think the risk landscape has changed, and it's the intellectual property, it's the data, it's the key individuals within organisations that are often probably more prized assets. So hopefully that's prompted some thought and some debate. I see that there have been some questions that have come in, which I think we would be really happy to take now.
Great, thank you very much, Phil and Archie. It's a really interesting topic, so I think we've all really enjoyed this session. And we have got a few questions. If the audience wants to ask any further questions, then please do send them through. There will be a bit of time. So moving on to the questions that have been posed so far. The first one is from Chris Philpott, and he asks, is moving data into a public cloud, such as AWS, Azure, looked on more favourably by insurers?
So I think probably, in short, this would probably be a yes, but it does come down to your own IT infrastructure. So obviously, these kind of cloud services do have very secure networks, and that's part of why everyone uses them. So it certainly makes the risk look more appealing for an insurer if you are using those. Of course, the important thing to remember is that as the data controller, in the event that one of these does suffer a big breach, you would still be liable, as I said, as the data controller, for any costs or liability for claims brought against you for effectively losing that data. But certainly, yes, I think in short, it is looked on favourably by insurers.
I think, could I just add something as well, just on that, Archie? I think it's an important aspect in terms of your insurance specification, because, correct me if I'm wrong, Archie, but there are some insurers that would provide cover for third-party data holders, and there's some that wouldn't. So I think just getting your specification right, because I think most organisations now would have some sort of third-party storage for their data. So ensuring that's part of your insurance cover would be quite important.
Yeah, absolutely. And as you said, yeah, that would be, it would be covered under a policy.
Great, thank you. And we've got a number of questions around ransom. So I think if we could just go through those questions now. The first one is not paying a ransom both counterproductive to both the company and other companies in encouraging and funding criminal activity? It is also unethical. Can or should steps be taken against organisations that pay ransoms?
That is a really tricky question, and it has come up before. So people aren't alone in flagging that. A couple of, I think, more observations than actually answering the question, but I will try and answer the question. But ultimately, ethical considerations will vary from organisation to organisation. there are insurance policies, so what we call kidnap and ransom insurance cover effectively does pay ransoms to third parties. I think there is also a bit of a sort of issue around the geography, and it's an important point because obviously cyber and data doesn't have any respect for geographical boundaries, and you could have organisations in other parts of the world where sort of this type of behaviour is accepted. Ultimately, it's the decision of any institution as to whether they pay a ransom or not. I think what I would say is the insurance policy will put you in contact with professional organisations who know the identity of, I suppose, what we would call bona fide organisations. So ones where if you pay a ransom, they will go away. And that is just a commercial consideration. Ultimately, if someone is genuinely holding your data and is going to distribute it publicly, and they are asking for a ransom, it's a commercial consideration as to whether you pay that or not. I appreciate that there are ethical considerations as well, but where we're coming from, we can't comment on ethical positions, but what we can say is that that there are other examples where that is part of day-to-day life.
Thanks for that. Actually nicely answers one of the other questions, which was around who and what determines whether a ransom is actually paid. So thanks for that. Another question around ransom. This actually involves cryptocurrency. So if cryptocurrency were miraculously made illegal or were to disappear, or if governments would be given special powers to remove anonymity and trace payments, would this significantly reduce ransomware type cybercrime? For example, without cryptocurrency, how else can the criminals feasibly receive the ransomware payments? What are your thoughts on that?
I don't know. I mean, I think we have to deal with realities. I think Bitcoin is now part of day-to-day life in the same as any other currency is. I can't comment on terms of government outlawing Bitcoin. I think there has been some political debate around that, but I think it is part of everyday life now. I don't know if Archie's got any thoughts on that.
No, I mean it's a tricky hypothetical. It's I think one that it's one of those sort of they'll always find a way kind of thing. But as you said, yeah, it's currently it's out there, and it's certainly fueling ransomware. But yeah, tricky hypothetical, I think.
Thanks for your thoughts on that. Another good question here. So prevention is always better than cure. Have you seen a difference in the volume and size of business cyber claims, i.e. non-HE, from those that have been implementing recurring effective training programs for their users and those that perhaps haven't?
Archie, do you want to?
Yeah, well, I mean, it's difficult to sort of, because we don't see, it's difficult to sort of compare, because it's hard to say perhaps whether this incident was less so because they'd implemented training, but we do tend to see when people are taking up so some of our insurers will offer in the form of a return premium a fund for training, things like phishing simulations or tabletop exercises. And yeah, simply in short, because those that are educated are less likely to suffer claims. From those graphs we saw earlier, one of the huge causes of claims is just simply clicking on phishing links. And we certainly find that in response to this, we've got good feedback on these phishing simulations that they can put through the whole company. And it's certainly very useful in the education process. So we do find, probably in terms of quantity of claims, we'd see a reduction. It is hard to say, on the size of these claims, because often, one claim can end up escalating, and just depending on how many records were held by that company, or there's lots of varying factors.
Thanks, Archie. And final question here. In your opinion as a framework supplier, how directly engaged or aware are the HEI finance directors of the huge risks profile, impact and probability of these risks? Or does the engagement more often come from procurement, IT and insurance managers? If the latter, how many inquiries are fully followed up by the HEIs, or does interest tend to fade away after initial inquiries?
It's a really good question. I think like any sort of insurance purchase, I think it's best if we can get everybody who's involved in the process involved. And as I said earlier, where we've achieved the best results on this is where we've got everybody who's involved in it. And it's interesting because this doesn't just sit with the IT division. Often, as we say, this will be loss of data, probably should be quite high up on any exec board's risk register. And some of the examples that Archie spoke about earlier with Marriott and BA, I think should underline that. So I think we have seen some engagement at FD level, more from this is a risk, how do we then manage against it? And we're not saying here that insurance is a complete panacea. Insurance needs to sit alongside other solutions that you have for managing risk internally. And the question previously about training, I think, was a really good one, because we want insurance to sit alongside other solutions. And ultimately, people need to determine if the insurance policy is going to, has a role to play. I think the FDs just want to know, where does insurance fit in? What's the cost of it, which is important, and what role does it have sitting alongside the other measures that you'll have in place? As we said earlier, everyone will have firewalls, everybody will have data protection systems in place. That doesn't mean that insurance is null and void, because as I said earlier, everybody has alarms on their building and employs security guards, but you still insure for theft. So it's just understanding the role within that. I think we have seen more sort of what we tend to see, or what we've seen with LUPC members around this, is an inquiry, a very rough indication of terms from Archie's team, and then sometimes the debate sort of bubbles away internally, which is okay, but I think it maybe isn't addressing it in the right way. What we'd prefer to see is, these are our risks, how do we then build insurance cover, and how do we budget for that accordingly?
Brilliant. Thank you very much, Phil. So thank you very much, both Phil and Archie, for a really, really interesting topic that we've been discussing this morning.